Yeah, so you hit on a really interesting point there. And whenever I see like a Brazilians debating whether or not to invest abroad, the debate always centers around the exchange rate. The dollar's up, it's a good
Yeah,
idea to invest abroad.
yeah,
Ah, the reai's up, why would you invest abroad? You're an idiot. But that's not really the point. So like I'm curious, how do you talk? And I hear that the other way too. Like all the
yeah.
gringo investors, they go, why would I invest in Brazil? There's so much currency risk. But I'm
Right.
curious,
So
how do you talk to your clients about currency risk when you talk
that's
about investing
something,
in the
yeah.
US?
Well, I hope that, if any Brazilians out there are going to watch this podcast, and that's what I've been telling prospects and clients and, friends and partners and anyone who asks me the same question, and it's the following. Are you an FX trader? No, right? So investing outside of your country, let's say you're Brazilian and you're looking forward to put money outside of Brazil, that's the situation where I'm more used with, arguing. But this situation can be used for American investors looking to invest outside of the US, any country. So it's a philosophical decision, first of all, right? Because let's say you come from an emerging markets country, right? And as we say, 4 years in a emerging markets country, it's like 40 years in the US of political instability, right? It's like the pendulum. It goes back and forth and crazy things happen on a 6 months basis, right? So if you're a wealthy person in coming from one of these countries, it could be Brazil, it could be any other one, especially in Latin America, and you wouldn't like to have 100% of your money in your country. So you decide to put your money, a part of your capital, outside of your country to protect your assets, like to have a diversified basket, but knowing that if something happens like what happened to the Venezuelans in the last decade, and it happened with Brazil in the 90s as well. It happened with many other countries in Latin America in which things go out of control, money devalues, inflation kicks in, political instability here and there, risks of extremely socialists trying to take on the governments and stuff like that. So if you're thinking about putting your money outside of your country, you're thinking long term. So you're not trading FX. You're not doing a carry trade. You're not trading for tomorrow for 1 year. You're thinking about possibly leaving this money for your kids, especially if you're older. So it just doesn't make sense to me. People get so attached to things like short-term price movements, right? And that's the same with Bitcoin and gold and the stock market, right? But if you look at it from a philosophical point of view, a point of view in which you're trying to diversify your basket, trying to guarantee that part of your wealth is outside of your country and protected within a stronger economy, a country that has more respect for laws and things like that. So what's the matter? And then there's a little joke, when local currencies in Latin America go up, they go up by climbing the stairs, but when they go down in the elevator, So from the real to go from 550 back to 490, it's like 3 months of struggle. But from it to explode from 350 to 560, it took 2 weeks, back in 2020 or the end of 2019 when it started to get really bad. It was already at four something, even before the pandemic. So, when it's going up, it goes up in climbing the stairs step by step. But when it goes down in the elevator. It goes super quick. So, that's the thing. It's all because of, it's not just about real interest rates differentials, for the economists watching here, but it's about the risk component, the risk variable in the equation. It's as important as the interest
Mhm.
rates differentials and the inflation's differentials and the growth delta, or whatever model you kind of like to use. But there's also like a risk component, and sometimes it's exponential. It's like it has fat tails.
Absolutely. I completely agree that it's a philosophical decision, right? It's you're hedging long-term risks for peace of mind, not trading Forex.